Wall Street has entered 2025 in full rally mode. AI stocks are booming, the Fed is expected to cut rates, and corporate earnings remain strong. But with Trump back in the White House, tariffs, deregulation, and economic shifts are reshaping the investment landscape. AI is the market's undisputed growth engine. Tech giants are thriving as artificial intelligence reshapes industries, from finance to defense. AI stocks now make up 35% of the S&P 500's total market cap, the highest since the dot-com bubble. The AI revolution is real, labor productivity is up 2.7% year over year, and automation is cutting costs. But will AI drive sustainable economic growth or just inflate another tech bubble? Trump's economic strategy is a double-edged sword. Corporate tax cuts back to 21% are fueling stock buybacks and earnings growth. But a 10% baseline tariff on all imports could reignite inflation, forcing the Fed into a tough spot. Tariffs are back in full force. Trump's China crackdown, including 60% tariffs on Chinese imports, is reshuffling global supply chains. India, Mexico, and Vietnam are emerging as new manufacturing hubs, while China prepares to retaliate. Energy markets are shifting. The revival of the Keystone XL pipeline, expanded drilling permits, and reduced EV incentives have pushed oil prices back up to $89 per barrel. ExxonMobil, Chevron, and shale producers are thriving, while ESG funds are losing ground. Defense spending is hitting all-time highs. Trump's $1.1 trillion defense budget is fueling investments in AI-driven warfare, hypersonic weapons, and cyber warfare. Lockheed, RTX, and Palantir are seeing record gains. But the real wild card? Interest rates. The Fed is expected to cut rates 2 to 3 times in 2025, but inflation pressures from tariffs and a $2.1 trillion deficit could change that. Bond markets are already showing resistance, with 10-year yields above 4.5%. Meanwhile, de-dollarization efforts are growing. Saudi Arabia and China have settled their first oil trade in yuan, and BRICS nations are working on an alternative to SWIFT. The US dollar remains dominant, but for how long? So where are markets heading? Bulls argue that AI-driven profits will keep stocks soaring. Bears warn that debt, trade wars, and inflation risks could trigger a downturn. The only certainty? Volatility is back. 2025 is shaping up to be one of the most unpredictable years for investors. AI, tariffs, Fed policy, and fiscal risks will dictate the next big move. Are you ready? Subscribe for more market insights, like, share, and stay ahead of the curve.